Hi, I'm Marco from the Charter Hall Direct team. In 2018, the Direct Office Fund went through a number of changes to increase the overall investor returns and also minimise the overall risk of the portfolio. This video will look at the repositioning of Direct Office Fund throughout 2018, and in doing so, I'm joined by the Assistant Fund Manager, Chris Choi. Chris, thanks for joining us.
Pleasure to be here.
Just before we dive into the detail, I want to recap the Direct Office Fund's mandate. The Direct Office Fund is a prime office portfolio in Australia only. It has a geographical bias towards the eastern seaboard markets, a tenancy bias towards high-end corporates or government tenants, and the same long lease thematic that runs through all our funds. Moving to the review now. Chris, 2018 was an extremely active year for DOF in terms of transactions. Do you mind providing a bit of rationale behind these and also the overall portfolio impact as well?
You're right, Marco. It has been a very active year for the Direct Office Fund, as we've sought to keep growing the fund in line with its high-quality mandate. During the year, the Direct Office Fund acquired $750 million of commercial office property. In buying these properties, we really look towards the strong fundamentals. So firstly, they're well located in the Sydney, Brisbane and Adelaide central business districts. Secondly, they have strong property metrics. So average weighted lease term, or WALE, of 8.8 years, and across the acquisitions, an occupancy of over 99%. And thirdly, a key focus for us, the properties have strong tenants. And these include the Australian Federal Government, State Government, and Suncorp Bank. I'm pleased to say that the Direct Office Fund is now valued at over $2 billion spread across 15 assets. Another key feature of the Direct Office Fund is that it has over 80% of its properties in the key Australian Eastern Seaboard market, which includes Sydney, Melbourne and Brisbane CBDs. Historically, these markets have been the best performing and most stable markets in the country. This is important because it means for DOF's properties in these markets, there is strong tenant demand, which means that there is stable income and property values for our investors.
Thanks, Chris, for that answer. Moving on. WALE is an important term always thrown around in commercial property, weighted average lease expiry. Can you explain how that applies to the Direct Office Fund and the overall portfolio impact in 2018?
Weighted average lease expiry, or WALE, means the average number of years left on a property's leases. The higher the WALE means that tenants are committed for longer. The shorter the WALE means that tenants may leave sooner if they wish. The Direct Office Fund has a WALE of 8.6 years, and this is one of the highest in the market. This means that on average, the leases in the Direct Office Fund won't expire until around 2028.
Thanks for that answer, Chris. On the debt side, capital market conditions have obviously changed quite dramatically over the last year. Can you provide a bit of commentary around DOF's debt profile and how that changed?
Yeah, of course, Marco. So the Direct Office Fund's gearing currently sits at about 37%, and this is within its target range of 25 to 45%. And this provides a buffer to its debt covenants. Also during 2018, we refinanced the fund's debt facility and extended its debt maturity. This reduces refinance risk. The Direct Office Fund's debt facility now sits at $1 billion and is loaned by 3 leading Australian banks. Additionally, the Direct Office Fund has fixed its interest rate over 60% of its debt as a minimum. This means that we are able to predict a large portion of the fund's interest expense, and we're able to create that stability for investors in their income.
Thanks for that answer, Chris. Chris, can you talk us through the makeup of DOF's total return throughout 2018?
Sure. I'm pleased to say that the Direct Office Fund returned a total return of 13.4%. Now, total return is made up of 2 components, income return and capital return. The Direct Office Fund's income return was made up of a distribution of 8.25 cents per unit, which was increased from historic levels. The capital return component was about 7%, and this reflects growth in the underlying asset value. And this growth came through 2 main channels. Firstly, property values increased through successful leasing through our internal asset management team, and also through strategic investment in our assets.
Capital preservation is the most important aspect of any investment Charter Hall provides. Can you talk us through the different investment procedures that management's put in place to manage the overall risk of the portfolio for the direct office fund?
Sure. Firstly, a clear mandate for the style and quality of acquisitions. Secondly, a clear exit mechanism for all properties. Thirdly, long leased and highly occupied characteristics. Also, combination of quality and diversified tenant base. Following this, a healthy level of headroom to debt facility covenants. And finally, strong alignment between the Charter Hall Group and its investors.
Thanks so much for joining us today, Chris.
Pleasure.
To find out more information about the direct office fund, which is currently open for investment, our other investment opportunities or commercial property markets more broadly, please don't hesitate to contact myself, Chris, or the Charter Hall team, which contact details are now on screen. Thank you.